Michael Saylor says Strategy's next trillion-dollar opportunity is not buying more Bitcoin. It is building an entire financial business on top of it. For years, Strategy followed a simple playbook: raise money, buy Bitcoin, repeat. That turned the company into the world's largest corporate Bitcoin holder with roughly 846,000 Bitcoin on its balance sheet. Now, Saylor believes that enormous reserve can be used for something bigger. He calls it digital credit. The idea is to create income-producing securities backed by Strategy's Bitcoin-heavy balance sheet. These products would target traditional investors who want liquidity, lower volatility, and regular income, but do not want to own Bitcoin directly. One example is Strategy's preferred equity product, Stretch, which trades under the ticker STRC. Instead of exposing investors directly to every major Bitcoin price swing, Strategy wants products that behave more like traditional credit while still benefiting from its Bitcoin reserves. Saylor described short-duration, stable, and highly liquid credit as a potential $1 trillion market. The opportunity is massive because trillions of dollars are already sitting in bonds, credit funds, and other income-focused investments. Many pension funds and institutions may never buy Bitcoin directly, but they could consider securities issued by a company holding one of the largest Bitcoin reserves in the world. Strategy can then use the money raised through those products to buy even more Bitcoin. More Bitcoin strengthens the balance sheet. That stronger balance sheet supports more financial products, and those products create even more capital. That is the flywheel Saylor believes could turn Strategy into one of the world's most valuable companies. He has even said that, looking back, he would have relied less on traditional convertible bonds and focused more on products like Stretch. But this model is not risk-free. Bitcoin remains volatile. If its price crashes, confidence in Strategy's balance sheet and credit products could weaken. The company must also continue meeting dividend and financing obligations during difficult market conditions. Still, Saylor's vision shows how the Bitcoin story is changing. The next wave of adoption may not come only from people buying Bitcoin. It may come from companies building financial products, applications, and entire ecosystems around it. That same larger trend is helping drive interest in Bitcoin Hyper. Bitcoin Hyper is developing a Bitcoin Layer 2 network powered by Solana virtual machine technology. Its goal is to bring faster transactions, lower fees, staking, decentralized finance, and programmable applications into the Bitcoin ecosystem. Strategy wants to build a credit layer around Bitcoin's capital. Bitcoin Hyper wants to build a faster application layer around Bitcoin's network. The project has already raised close to $33 million and has gained exposure through major crypto platforms and publications. One Hyper token is currently priced at $0.0136841. The next scheduled presale price increase is coming in less than 1 day. Because Bitcoin Hyper is still extremely early, investors can begin with a relatively small speculative position rather than committing a large amount of capital. However, early-stage projects carry much greater risk. A low token price does not guarantee strong returns, and Bitcoin Hyper still needs to launch successfully, attract developers, and prove real demand. For investors comfortable with that risk, it may be a worthy project to research before the current pricing stage closes. The link is available in the description. Michael Saylor spent years proving Bitcoin could work as a corporate treasury asset. Now he is betting that Bitcoin can support an entire new financial system. If he is right, the biggest Bitcoin opportunity may not be the coin itself. It may be everything built on top of it. As always, conduct your own research and never invest more than you can afford to lose.